All right, so welcome everyone to this session of the North America meeting. I'll just start before letting the word to Bill. I'll just start with a couple of housekeeping slides. Just a reminder about our antitrust statement that we are not supposed either publicly or on the chat to discuss any topic related to pricing, discounts, bid strategy, group boycotts, allocations, output decision, future capacity, or any other topics of that sort. Thank you very much for your understanding on that. And then during the meeting, during the conversation, so you are most than welcome to share any questions that you would have using the chat function. It is a Zoom meeting, so we kindly ask you to remain muted if you don't have anything to say, but then if you want to ask a live question, you can raise your hand and we will let you speak. We also kindly ask you to rename yourself with your full name and the name of your company for a better visibility of who is with us. And that's it on the housekeeping. So I will now stop sharing my screen and let Bill start the official part. Thank you.
Thank you, Maureen, and welcome everyone. You know, it's always nice to see faces. So if you aren't afraid to turn on your camera, please do so. If you prefer not to, I can completely understand, but feel free to turn your camera on and join the party. I do hope you were inspired a bit by the earlier plenary, at least relative to the conversation we're going to stray into, I suppose, in this breakout discussion. We are going to try to tackle this question of, you know, the interrelationship between innovation, finance, climate action, and just transition. And I think all these kind of dimensions will certainly come together in the speakers that we've assembled today to help us navigate that discussion. But we also want to make sure we're getting input from you, the attendees. Certainly, I know we'll have a lot to say, but if you don't volunteer your questions in the chat or raise your hand to make a point, please feel free to interrupt and do so. Today, I'm going to be joined by three wonderful participants from our partners organizations and our members. First and foremost, I'll introduce Thais Fontes, a sustainability manager at Rabobank. So Thais, thanks for joining. I'll certainly welcome Andrew Bahar from a great organization, As You Sow, and I'll let Andrew give a little insight as to what they do. And then last but not least, Michael Hershwitz from IFF, and I'll let Michael tell you exactly what his role and responsibility is in the innovation agenda at IFF. So why don't we just start by just some brief introductions, and I'll go in the little bit of different order than I introduced. Andrew, over to you. Tell us a little bit about As You Sow and how you see this sort of interrelationship between innovation and finance. Over to you.
Well, thank you so much. And thank you for inviting me to speak today. So for those of you who don't know, As You Sow is a nonprofit. We're a 501c3, and we've been around for 30 years. We were founded in 1992. We focus on shareholder advocacy. We engage corporations representing shareholders and as shareholders on a range of issues, including climate change, environmental health, a lot of human rights issues, racial justice, and gender equality. So a range of issues that we engage companies and offer, you know, a lot of research that we do on material issues, particularly on material risks. And, you know, certainly climate change is a major risk that we see most companies, if not all companies, facing. That, you know, I can quote Larry Fink here that that climate risk is investing risk. And so, you know, each company is facing it in their own supply chain, certainly in their customer base and in their products and services. So there's going to need to be really innovation of business model. And we work with a lot of the big oil companies, you know, with direct engagement on their business models, also utilities. We work with a lot of utilities, pipeline companies, petrochemical plants, banks. And I think that there really needs to be, it's not just your products, it's really your whole structure. It's that climate change is going to have an impact across the board. And not only on your operations, but also on where the money goes. And we've been looking now at every company's 401k plan. And what we see is a lot of companies that are doing great job on climate change, have electric vehicle fleets or powering their data centers with renewables, yet all their employees are invested in coal-fired utilities, burning down the Amazon rainforest, palm oil, all of just basically extractive industries.
Right.
But that also extends to, just one more thing, into justice issues. They're also invested in private prisons. And so it's really, how do you become a holistic company and take your goals and apply them across the board?
Yeah, we've certainly noted of late with some pretty principled examples of how shareholders are elevating their voices to drive companies to think and do things differently. So that's great that you're representing that dimension of the conversation today. Michael, let me shift over to you. Tell us a little bit about your role at IFF and how you're sort of thinking about this transition, a little bit like Dylan Siegler talked about, this transition to think of innovation differently along the social dimension. Over to you, Michael.
Thanks, Bill, and thanks again for inviting me to participate in this event. I think it's really great conversation so far. So first, introduction to IFF, for those who haven't heard of us. We have more than 130 years of history creating innovative scents and tastes for the CPG industry, the consumer and packaged goods industry. And we're now an industry leader in food, beverage, scent, and health ingredients, as well as biosciences. And so our purpose, as we say, is to apply science and creativity for a better world. And to bring that to life, we collaborate internally and externally to create scents, tastes, ingredients, and integrated solutions for the products the world craves. Now, what does that mean? How do we all bring that to life? Well, my role is to embed sustainability into the product and technology development process, the innovation process. That means understanding what matters or has the potential to matter through the lens of sustainability when it comes to thinking about where a product or material comes from, how it's made, and what it does. And sustainability is just one word, but as we've been talking about, there's many different elements of it, some of which are more mature within companies' processes than others. And so it's really important to ask the right questions early on in the process around the impact that your product may have, and make sure that you're addressing that early so you don't have surprises later on when someone else, maybe like As You Sow, comes and tells you about how your products are impacting your supply chain. So again, my role here is to embed that process and that governance early in the innovation process, so we're designing products to do more good.
Fantastic. And believe me, having spent as many years as I did in the research and development world, the innovation world that you're in, I can tell you how fun it is at times to try to convince engineers and scientists to think a little differently about their mission and their responsibility. Thais, over to you. Rabobank is quite active in the sustainable finance arena. But how do you see, Rabobank influencing the role of innovation when it comes to this question or this topic of just transition? Over to you, Thais.
Thank you, William. Thanks for inviting Rabobank to this event. Yeah, Rabobank is a huge bank focused on agribusiness sector. And when we talk about climate change, the impact on agribusiness is huge. So we thinking in a long term and thinking to work together with our clients in the future, we need to be really close to them in order to help them on the transition to be more sustainable and reduce their emissions and with less impact. So Rabobank has been developing many financial solutions, but not only the financial solution, but networks and knowledge together in the three pillars that we work with. We really believe that finance is not the only solution, but we need to have knowledge. We need to talk to the clients. We need to show them what is happening, where we need to go, and help them to go into this path. And technology is something really important, and every day we see more and more things happening, such as satellite images, helping the banks on reducing the risk of the operation, and also helping the farmers and the corporate clients on increasing their productivity as well. So we've been tackling lots of ways the climate change together with our clients.
Thank you, Thais. It's such a critical role the finance industry is going to play in this reshaping of how companies think about their innovation approaches, because it is the end of the day, it is the lifeblood of the company and where they're innovating on products and services, whether it's in the agri space that you're very active in, or in the manufactured goods space that other members of ours are certainly associated with. Now, having said that, I guess, you know, Andrew, back to you. You're representing that sort of dimension of we'll call it the private sector that's influencing, that's an influencer through your shareholder networks. Where do you think we are in this conversation of asking companies to think more carefully about the just transition of their climate actions? I know we're very aggressive on climate actions because we can see that in, you know, the ExxonMobil, the Chevron examples that just materialized for us. But what about that just transition dimension?
Well, we're just starting it. So about a year ago, after the George Floyd murder, as you saw, started to gather data on racial justice, and we put together 22 key performance indicators, and our research team gathered information, and we published in March a racial justice scorecard looking at the S&P 500. We had been working on diversity, equity, inclusion, and we also published a scorecard on that. So starting with DEI, there's so little data out there that we only are grading companies on, do they disclose? Like, we don't even have enough data to say what are best practices at this point. And so we asking companies to disclose EEO1s. We're seeing much more of that now. And I think after we filed some resolutions with about 15 companies, asking companies to disclose via SASB, the Sustainable Accounting Standard Board, which part of their standards are to disclose EEO1 for human capital management. And BlackRock ended up weighing in on that and saying, basically, we're going to vote against your board if you don't use SASB. So now we got about 70% of the S&P 100 disclosing EEO1. But it's really just the first step. We need granular data on recruitment, retention, and promotion data cut by gender, race, and ethnicity, because the EEO1 kind of hides a lot of stuff. You can't tell if there's a gender promotion gap, or if people of color are just being hired at the lowest levels and never being promoted. So on DEI, investors just need more data to be able to make investment decisions. On racial justice, we've added 4 KPIs around environmental racism, and we'll be releasing that on the 29th of July. And what we found is that there's a lot of companies that are doing more damage than they are compensating for. So out of the S&P 500, 47 companies are going to be getting a score below 0. A lot of them are big oil companies where they do more harm to communities of color than what they're compensating for by making some donations or having some recruitment policies. So overall, I'd say we're in early stages, and that the takeaway is that companies should realize that by just putting out exactly the truth and saying, this is where we are right now, and this is where we want to get to, and these are the steps we're going to take, these are the milestones we're going to have over the next 2, 3, 5 years, investors respect and will fund that, will invest in that, in where you're heading, and the fact that you're willing to make a commitment to be a leader and to actually set milestones and then make them. Or, hey, we tried, but we didn't get all the way, but this is why. So it's that level of dialogue, of honesty that investors are looking for. So I think all these scorecards, this is what it brings out. We have conversations with a lot of companies around just getting on the path. And then we've been running shareholder resolutions. And this year we had 2 majority votes. We had an 82% vote at Union Pacific Railroad on diversity, equity, inclusion, a 60% vote at American Express. We ran our first shareholder resolution on racial justice at Abbott. And for a first-year resolution, we got a 40% vote. So I think that the message is that shareholders want this data, and that don't be afraid to just say where you are and design a plan for how to improve. That's really what we're looking for.
Really critical. I mean, I have just in the last 2 days, I've seen a market increase in how the media is covering the DEI topic and calling out, frankly, companies that are in some ways not putting information out and being transparent about it. But more and more companies seem to want to be open to that.
And what it does is it creates a culture that attracts the best and the brightest, and retains employees, and the productivity goes off the charts when people feel like their companies are actually taking action.
That's the second time today we've heard that point. You know, Ed, I don't know if you saw Ed Farrington from Natixis talking about this through the lens of the investment community, but that was his exact point. I think it was really critical. Michael, let me flip back to you for a second. And please, those that have joined this breakout certainly don't want to be doing all the talking and question asking of these three wonderful people. So please do feel free to drop your question or your comment or raise your hand if you'd like to come on screen and do it with us. Well, Michael, you know, IFF, I know this because you're a great member of WBCSD, but you're very active in circularity. And and thinking about circular business models as a way of running your business, in fact. But how do you think of circularity in the context of this just transition context? And any thoughts on that? Over to you.
So circular economy and circular design, right? They're not exactly the same thing. We realize that facilitating a circular economy is important, and we design products to do that. But that's just the first step. So you design your products to use renewable materials, and you design them to biodegrade back into the biosphere, at least in the context of the types of IFF products, or be cycled within the technosphere as the other side of the circular economy conversation. But that, again, that's only the first step. You want to make sure that you're designing your materials and the renewable and natural materials that you're using are sourced responsibly, for example, making sure they have ethical and responsible treatment of people all the way through your supply chain. And there's other elements too. You want to make sure you're climate friendly, you're nature friendly, land use isn't negatively impacted. You want to make sure that your materials have good impact on an aquatic environment, if that's where they're going to end up, and other elements of environmental fate. So there's all other elements of circular design that impact things more broadly than just, do you have a linear product and a linear company or a circular company? A good example of how we address that with our natural materials, at least in the scent business, is that we actively assess where our efforts and investments can create more value to the farming communities that are so critical to the supply chain, and often, you know, existing in some of the poorest parts of the world. And so a good example of that is the Vetiver Together and Vetiver Forward programs in Haiti, which work with the vetiver root crop. Now, this is a crop that has a 12 to 18 month crop cycle for optimum oil content, which is needed for a lot of these fragrance products. And there's no income diversification amongst many of these farmers, which means that 100% of their annual income is from this one harvest of this one crop every year. And so if you have a lean year and you're running out of money, you're incentivized to harvest this crop early, which means that harvest isn't going to be as big as it could be, and you're jeopardizing your timing for next year's crop. And it's just this vicious cycle. And so we create partnerships with NGOs and customers to build programs that help address that in a way that it provides more capability for the farmers to have income diversification, giving them diversification of crops and livestock, training on better agroforestry and harvesting techniques to support healthy soil, healthy climate, and a healthy biodiversity environment. And that way, they're not just stuck in this cycle. And at the same time, even during COVID-19, where demand for the vetiver root dropped, the income diversification components were fast-tracked. So it's not just like getting the program in place and saying, okay, we're done. It's actually managing the program to make sure that if something changes, you know, these farmers aren't disproportionately affected for what is in this case a temporary dip in demand. And so overall, you run into situations where you're enabling your farmers all the way up your supply chain to be able to allow their crops to grow to full cycle, which enables them a more profitable harvest and also provides IFF and our customers and consumers with more stable supply of materials, which leads to better contracts, which leads to better prices. It really is a situation where you're not just It's not philanthropy, it's good business, and everybody wins, and you do so justly. And there are other examples of how we do this. There's other programs in Indonesia around patchouli. We have a program in Madagascar where we're actually piloting blockchain technology with 450 smallholder farmers to trace each vanilla bean's journey throughout the entire supply chain. And as we know, like, transparency brings fairness, right? There's no clear dotted line to say people will be treated better because of this program, but we know that when supply chains are more transparent, stakeholders tend to get their fair share. And so, combined with third-party certifications like Fair for Life in this case, we can ensure that the entire process around vanilla harvesting and cultivation and the supply chain ensuing is environmentally and socially responsible, and farmers receive their fair share in a way that we can then grow with them, and not disproportionately, but in a just way.
Yeah, and that's fantastic. I was thinking as you were offering those great thoughts that one trick pony farmer that you kind of sort of not doing it justice, but you know what I mean. Climate change is going to disproportionately impact those types of business models, if you will. And I'm thinking about the US right now with the hottest temperatures probably in history happening on the west coast of this country, and the wettest July we've had probably historically on record, with, I think we're approaching a foot of rain here in New England in just the last week. It's an amazing disparity that, and you see these impacts on the folks that are relying on cultivating the land and doing the things they need to do. But Thais, I want to come back to you. It was an interesting comment, and I know you're not in this space, but you can segue back to agriculture because I know you will. But when Jim O'Brien talked about, I won't make reference to the company because I didn't do the business, but he made reference to a large equipment provider that was going to offer a fleet of electric or zero emissions vehicles to a client. And it got me thinking, the diesel mechanics, the shops, the people that are, probably very much dependent on those services as their income are suddenly going to be impacted by that decision, or at some point are going to be impacted by that decision. So let me try to flip it back to you if I can. How does Rabobank think about how to influence investments? Maybe you're providing capital to that company to make their fleet zero carbon, but how do you think about your role in incentivizing those investments to think about those societal issues they may be creating? Over to you.
Thanks, William. And I will bring here what Andy mentioned as well, these milestones from the clients. So when the company has in mind what they want to achieve, the bank can support them in order to achieve those KPIs or those milestones. I'm gonna mention here some financial solutions, and then we can try together here to put in another sector that not agribusiness, but I think that it's something that we can consider in the whole value chain or the whole processors and so on. So the sustainable linked loan, for instance, is a business development. It's a financial solution, that provides a loan for a client to achieve his own milestone. So the better when this client proved that he achieved that milestone, that he achieved that goal, he received a discount. So this is one of the ways that the bank found to incentivize them and to support them in this transition. Some of the clients, they come to us and say, okay, I want to do something, but I don't know what to do. So then we come with the knowledge pillar, trying to see what the market is about, what's happening in the market, what he can do to do this transformation. And we support them with this financial solution. That this financial solution can be related to KPIs such as carbon, can be related to a social impact, can be related to better climate smart agriculture, so better measurement of the the production. So there are many ways that we can do that. This is one of the ways that we found. I want to mention one thing that we have in Brazil, where I worked for 9 years. It's what we call we relate the interest rate to the sustainability score of the client. So all the clients, they have a sustainability score, they receive a visit of a technical assistance, and the result of this evaluation or of this visit in the field is a sustainability score. And this score is related to the interest rate. The clients, they know what it means, and they know that if they increase their score, they will receive a better interest rate in the next deal. So they ask us what they need to do to increase. So here we build a trustful relationship between the bank and the client in order to help them in this path on becoming more sustainable, or on circular economy as well. We have many projects in place to help them to achieve this circularity. Those are some of the financial solutions that we can offer. And we see many others, as Agri3 Fund is a blended finance fund, public and private, that works with a de-risking facility. Sometimes the client, he doesn't need a better interest rate. He's not willing for that, but he is willing for a de-risking facility that can that he can have this loan in a longer term. It helps him in what he wants to achieve. So it depends on what the farmer, what the client needs. We can develop things aiming to help them on this achievement.
Yeah. Yeah, and hopefully, I think we've actually got an interesting system here, right? We've got Andrew, who's driving it through the board, if you will. You've got, Michael, who's receiving those signals probably in his daily grind, and then you've got, the financial institutions who are serving up, in many cases, the capital needed to support that transition. This is the system, frankly, that's gonna be necessary for the true transformations we talk about. So this is a wonderful example. We talk about the enablers of truly the enablers coming to action. I guess I go back to you, certainly, Andrew. The idea that and this is for all of you, frankly, for Michael and for Thais as well. The idea that innovation, well-intended, can certainly have this not so intended consequence of a social disruption. Decarbonization is clearly an agenda that many companies pursue, but are they thinking about that as it translates to a disruption in a service industry or something that technology might somehow upend? So I guess you said, I'll start with you, Andrew. You said that these conversations are just starting. I think I concluded we're just kind of scratching the surface. But where do you see, do you have any sense of where this really starts to play out? Are we thinking, it's happening now? It's going to be front and center in the next 5 years. These social issues are going to take over the board conversations because we've got climate figured out. I mean, what are your thoughts on that?
I don't know that we got climate figured out, but we will soon. We're working on getting every company to commit to a Paris compliant transition plan, a net zero 2050 plan, which means, just so everybody understands, that's net 50% by 2030. So the idea is reducing emissions 5% a year over the next 10 years to get to 50%. Those are the low hanging fruit. And then it's more difficult 2030 to 2050. So it's smaller increments each year, but that's something that we believe every company will be committing to. We put out a press release this morning. Yesterday, GE agreed to that. We got a 98% vote at GE on this, and they agreed to exactly what I just said, a net, and this includes scope 3 from their airplane engines and all of they make a lot of generators for power generation. So they're including the Scope 3, the emissions from all of their products. So that's General Electric. And that literally, that press release just went out this morning. So Unilever's doing it, Moody's doing it, S&P is doing it. Every company is going to find a path to do this because they know it's in their own best interest. So climate change is, I think, beginning to move that way, but we still have, the whole Russell 3000 to get on board, and that will happen. In terms of other innovations, we were talking about farming and regenerative ag just a minute ago. So we started talking to General Mills about regenerative ag a few years ago, and they committed to it across the board. But we also talked to Kellogg about their use of pesticides, particularly a pesticide called glyphosate, which is known as Roundup, that they were spraying on their wheat, oats, and beans right before harvest. So it's just getting into our food system. It is a known carcinogen. And we talked to them about, you're poisoning your own customers. And they came to see that this is a real risk to poison your own customers. And they committed to a no glyphosate policy. Now, farmers weren't using glyphosate 10 years ago. It was an innovation. It was seen as an innovation to desiccate the grain right before harvest. You'd get a 3% higher yield. But there was costs associated. You had to buy the chemicals from Monsanto. You had to hire the airplanes. That it really came out as a net positive for these farmers. And now they're seeing actual change. They're seeing the return of pollinators. They're seeing the return of birds. And so because of that, Pepsi saw it and said, okay, we're going to commit to 7 million acres this year, which is a tiny fraction of the 600 million acres of farmland. But that's Pepsi. That's a big thing. Campbell's is now looking at it. So on the one hand, they say you can call this innovation, but we're actually going back to a method of farming that was much safer, that was not putting toxins into the water system, not spray drift on adjacent communities, which generally were low income or communities of color. So there were all these negative externalities that happened as part of what was seen as an innovation, but actually wasn't. And so the companies are realizing that there's a lot less risk to actually this other system, and that they're going to also do great things for their brand. I mean, Kellogg can say our food, eating this bowl of Special K is safer than eating their competitors' bowl of food, and also potentially avoiding a lot of litigation. There were 2 big lawsuits on glyphosate, a $200 million settlement, a $400 million settlement. Those were people just spritzing it in their backyard to knock down the weeds once a year. We went to Kellogg and said, look, people are eating this in every bowl of cereal every morning. This is going to be bigger than tobacco when the cases start to go in that way, that people are ingesting it. So companies are showing leadership. They're saying, yeah, this is environmental, social, and governance. But things, we've had a philosophical shift. It was just a year and a half ago that the World Economic Forum put forth their new manifesto of stakeholder capitalism that said Milton Friedman, his concepts brought us to where we are today. They brought us to our climate, our oceans filled with plastic, our social fabric shredded, that maybe his theories just didn't quite work out as planned. And shareholder advocates have been advocating for stakeholder capitalism for 50 years, but take care of your employees. You're going to have a culture. People want to stay and work. They attract the best and the brightest. Take care of your customers. I mean, those are the people you need, their loyalty, and you can earn it. Take care of your communities. Don't dump in the commons. You're going to have lawsuits. It's going to hurt your brand. Don't have slavery in your supply chain. Again, it takes companies decades to overcome that. So by taking care of all your stakeholders, you're actually reducing your risk. You're protecting your business. You're more competitive, and your shareholders are going to have rewards. And the other, just one last comment is, a lot of the companies we talk to, they say, yeah, but we're going to get nailed in the short term. And I said, I've got on my screen the register of all your shareholders, and I'm looking at it, and I can tell you that 80% of these are long-term shareholders. They're pension funds. They're the big asset owners. They're going to own your shares for 30, 50 years. I see maybe 10 to 15% are short-term. So why are you doing all this work and avoiding becoming a better company, a safer company, with a better culture for that tiny minority. And that's, I think, a myth that we need to overcome, this short-termism.
Yeah, certainly not to disenfranchise the day traders, but come on. I mean, let's have the day traders sort of in the mix here of saying we want to see change even in the short term, right? I mean, you're 50% by 2030. By the way, it's no longer 10 years. We're countdown to 8. I think short-termism is starting to, factor into these conversations because change needs to happen really fast, really quickly. Michael, any thoughts for you? And I also wanted, sort of to get your perspectives. We oftentimes leave kind of venture capital and private equity out of these conversations. So I wonder how do you at IFF look at opportunities that might be in the just transition or the climate action space that you need to leverage from private equity or social venture capital? I just made that up, but maybe that's something we need to do. Over to you.
It raises a couple of interesting questions and a lot to unpack from what Andy said too. So I'll take things point by point a little bit. So the concept of innovation is interesting, right? Like it brings a quote to mind that's not perfect, but it works sometimes. R&D is turning money into knowledge, and innovation is turning knowledge into money. And there's obviously good ways to do that and less good ways to do that. And that's been kind of this whole conversation is how do you avoid the less good and do the more good? And in order to do that, you need to have processes in place early on to ask the right questions and to what Andy was saying, assess sustainability from a risk perspective almost. You all want to be companies that when you win, and this is the philosophy for designing good products, you want to be in a situation where if your product does well, if it wins in the marketplace, if it steals market share from your competition, if it cannibalizes your own products, is the world a better place for that? Are people benefiting? Is the planet benefiting because of this massive success that this product has? And you ask that question at the very beginning or as early as is reasonable in the product development process. And if you do that and you define ways to answer yes, and you define ways to also say, okay, what could go wrong and how do you mitigate some of those risks? Thinking about the glyphosate example, you have then a portfolio of products and then a company based off of products that when it grows financially, the world is a better place ecologically, socially, whatever metrics you want to use. And so if you embed all those processes early on, you have ways to drive sustainable innovation. Now to your point about venture capital, driving startups, I think is a good example of how this is actually coming to play. Startup companies, you talk to them, the ones that are developing new technologies, the vast majority of them have a sustainability component to their value proposition. That's a good thing. And so, having the financial resources and the financial connectors to connect these startups to the companies that can help scale some of the stuff that they're doing really quickly. Money is fuel in economics, and we know that. And so identifying the right things that you want to fuel, the right fires that you want to pour the fuel onto, just helps drive this thing faster. And as you know, speed is kind of important as the 8-year mark comes up.
Yeah, right. Well, great points, Michael. Thank you. And Thais, do you like what you're hearing? I mean, is Rabobank ready to be the money bank for these wonderful conversations with this transformation we're going to go through? Over to you.
Absolutely. We've been working pretty hard now in the Food System Summit, for instance, is something that we've been leading many conversations and being really active in all the action tracks that involve the food system transformation. And taking a little bit what Andrew said and what Michael said, I think that when we start developing the knowledge of the farmers, for instance, so I remember in the past when we had a conversation regarding sustainability with a farmer, he said, okay, you are the boring green person that it's coming to my farm and asking me to hug trees. And he said, no, it's not about that. It's about market in a long term, in a medium long term. This was about 10 years ago. And now they see that that conversation that we had in the past is now bringing them new opportunities. So it's shifting the way of thinking as well. It's bringing information, it's connecting the dots, it's showing how other works. it's connecting with the companies and the consumers. We can't forget the consumers. The consumers are the ones that will drive how the market will grow. So it's organic, that we know that it's a small piece until now, up to now on the market, but we see every day more and more the consumers asking for information from the product that they are consuming. In the past, we didn't know that, so we just got the milk. We don't know which cow it came. So now we want to know, and this is something that is really important for the farmer and for the whole chain. Just bringing another thing again on knowledge. And I think that it's something that we must address with the entire value chain, is like everyone is talking about carbon, everyone is talking about this food system transitions. And at the end of the day, the farmers, the companies, they will be the ones that will need to take the lead and to do the transformation and to apply that. So how to connect them, how to develop them, how to share knowledge, how to take information, and how to support them, not only on financial solutions, but on the whole process of this food system transformation. When we talk about smallholders and technology, sometimes they not even have internet. And we are talking about technology, we are talking about apps, but they don't have the internet, they don't have telephone. So we need to bring this into the light of the conversation and bring them into don't forget them and take them out. We need to be inclusive and bring them to the solution as well.
Great. So we've got about 8 minutes left, and I'm going to throw a surprise question at each of you, but it's the same question. So it's 2035. What's happened? Andrew, over to you.
Well, the Russell 3000 all hit their 50% emission reduction by 2030. So we're breathing a little bit easier, and they all have targets, they know, and they all have a plan to get to net zero by 2050. So we're feeling a little better. They've integrated racial justice into that transition. So now we're seeing what that means in terms of companies being on the path toward diversity, equity, inclusion, racial justice. A lot of the companies that just said we don't want to be leaders and want to stay in the destructive, extractive paradigm have gone out of business. They've either been acquired or they just wound down. So a lot fewer oil companies. We don't have any fracking companies anymore. And we actually have an economy that is based on justice and sustainability. And so we're now starting to really rebuild. I'm very optimistic.
So in 15 years, the world will at least have curtailed the issues that we're sort of experiencing today, right?
We will have implemented the World Economic Forum and Business Roundtable's Stakeholder Capitalism. We will actually know what that means to implement what it is that we all promised.
I love your vision, your future vision. Michael, what do you think? It's 2035. What's going on?
So think about 2005 to 2020 as time of the size of distance we're talking about. And a lot happens in that kind of period of time. So breathing a little easier, I think, feels about right. The marketplace has the trends that we're seeing now about consumers spending or voting with their dollars on which companies are going to survive and which companies are not going to survive based on companies that live authentically a purpose that does more good, has created that virtuous cycle, and we're starting to see it play out, right? Companies that are actually doing good are growing because consumers want to buy the products or support the companies that are doing more good. How does that happen? Maybe blockchain has enabled consumers to buy products and see as easily as the price on the label the carbon footprint associated with that product. So they know very quickly which products to buy that actually do some good. Sure, 2035, I think that's reasonable.
Thais, your turn. It's 2035.
Yeah. Wow. Yeah, I think that having the new revenues for the farmers, considering the carbon sequestration, the pricifying their products in the right way, giving value for how they produce. And yeah, I think that my colleagues already said everything. We are breathing better. Yeah,
Wonderful.
difficult question. Yeah, I hope to see all the companies already working with sustainability and all the matters and all the information all together, bringing this as a business and not as a problem, not as a something that it's hard to do, but something that it's already in the DNA of the companies.
Yeah, it's interesting. All of you kind of reflected that the transition to need to change has happened in that period. And Andrew, you talked about the ones that didn't change were the ones that either got bought up or went out of business, because that mindset shift that you all are imagining is going to happen in this time frame is truly taking place. And I'm interested to see Namrata's comment that it's about smart cities, smart society, and hopefully more smart policy decision makers. I can't promise that, but we'll certainly make try to make that choice with our votes as we try to think about who we want to have represent these issues for us as we go forward. Final thoughts in the last 4 minutes. Anybody here? Michael, Andrew, Thais, final thoughts?
I think this is an amazing moment of opportunity for companies to actually show their leadership. They will win investor following. They will win customer loyalty by just coming out and saying, this is where we are, this is where we're going. And if we need help, we need help. But these are best practices. These are our goals. And if you don't hit them, why, how you course corrections. This is a time about truth and really just veracity and being part of a broader community, and people will flock to you. The money that's going into ESG investing, that was one out of every $12 10 years ago, and it's one out of every $3 last year, will soon become just plain old investing. And that the idea of irresponsible investing it's just going to become a marginal thing. So this is a moment to really shift your culture, and for your boards in particular, to do their job, to do oversight and to incentivize executives to make these changes. People, CEOs get stuff done. It's amazing when they're incentivized, when they're going to get a bonus, when they're going to get their pay. But not only CEOs, the whole executive team. So boards need to incentivize the management to actually make this change. And that's what we need to see. We need to see, that's my message.
Great, thanks. And as you saw, is certainly going to be a key contributor to the boardroom discussions that they're going to take place, I would imagine, in that transition. And WBCSD, as you know, is clearly the place where we want those same CEOs to come together and share their experiences, lead the conversation. It's the how organization of how we're going to actually achieve some of these transitions. Michael, last thought?
I think Andy said it really well. From the outside looking in, I can give the perspective from the inside of those companies looking out, where you're starting to see those executives saying, okay, let's do it. And incentives work for sure. You want to see companies incentivizing the right behavior all the way down the management chain, not just at the very top. But at the same time, don't just think about how we're going to do it, think about who you're going to need to do it and what processes you need to implement all the way throughout your product development process, procurement, operations, finance. You need to have this thinking existing embedded in every function within your company if you really want to see it play out.
Right. And of course, we need all of those functions to represent the diversity of the communities that are involved in these conversations. So absolutely. And Thais, last but not least, to wrap up.
Yeah, I think that should conclude, William. I think that the main message here is to work together, because alone we will not be able to do this transformation. We will need to support each other. We will need the knowledge. We will need the solutions. So we need to be connected. We need to build coalitions. We need to work toward this, and we must do this together.
Awesome. Thumbs up from Namrata, thumbs up from me live and in person. Great conversation to the panel. Thank you, Andrew. Thank you, Michael. Thank you, Thais, for your contributions. And to everyone who's joined us, have a wonderful rest of your day, evening, morning, wherever you are. And we'll certainly look forward to hearing your comments and feedback on this discussion in the chat on the Event Hive platform, or however you'd like to share it with us. Thank you very much, everyone, and have a great day.